trading cues then kickstarting the morning with the FOMC meet outcome that took place yesterday. The Fed has decided to keep the rate steady for the 6th straight month. It has also essentially ruled out an interest rate hike as the central bank's next move, despite few recent signs of easing inflation. Now, when you look at the commentary coming in from Jerome Powell, Chairman, he says that they're not greater confidence on inflation so far this year. He also added that regardless of the upcoming US presidential election this year, the central bank continues to make its interest rate decisions independently. Let's also listen into what else he had to say on the rationale for rate cuts.
The FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. We do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate.
Well, all right, that's the word coming in from Fed Chair Jerome Powell, who says a rate cut is not likely in the next meeting as well. But let's shift focus. Let's take a dive into the global earnings. The Starbucks and Qualcomm have also posted their numbers. Starbucks has missed expectations across the board, posting lower than expected revenue, earnings, and same-store sales growth as customers cut back on the frequency of visits as well as the size of orders. On the other hand, Qualcomm has surpassed Wall Street expectations, providing a strong guidance for Q3.
All right, then keeping it with US job openings dropped to the lowest level in more than 3 years in the month of March. The Labor Department reported that employers posted 8.5 million vacancies in March, down from 8.8 million in February.
All right,
if you like this video, then like, share and subscribe to ET Now.